Hello and welcome to BQ Prime. You're joining us on this special broadcast where we're discussing IDFC First Bank's results. The bank reported a net profit of about 474 crore standalone basis. That's a 61% increase year on year. I have with me Mr. V Vaidyanathan, the MD and CEO of the bank. Welcome, Mr. Vaidyanathan. I wanted to first ask this 61% growth question. Where is this coming from, sir?
Mainly coming from operating leverage. If you see, our loan book grew by 24-25%, but our NII grew by 36%. Yeah. Our operating profit grew by 45%. So you can clearly see if this is outstripping the loan book growth coming from operating leverage. And the other big thing is that our credit cost has now come down a lot, asset quality, all that benefits coming from.
I want to touch upon the advances rate. Now, you've reported a 25% increase. That's asset base is about 1.71 lakh crore, right? So, is this still within your focus area groups that you're growing in, or are you looking at some newer opportunities as
well? See, frankly, in the space we are playing in, we can easily grow 22-24%. Very, very easily. Even big banks, ICICI Bank are growing at 20%. No, so therefore we feel that this story will go on for quite a while.
Okay, fair. The benefit on the loan growth reflecting in NII, I'm assuming it's a lot to do with the current interest rate scenario. That's to pass on the cost, and that's how the interest income is going up. But how much of a headroom is left on your portfolio? Has all the cost been passed down to your borrowers?
You're absolutely right. Actually, to an extent, because to the extent we had floating rate products, the interest rate, the customer got passed on, and then deposits catch up over time. And that's one of the reasons why the NIM opened up so much. But the good news for our bank, actually, Vishnath, is that our floating rate product linked to repo is only 24% of the book, and all floating put together is only 40% or 39%. So therefore, large portion, 60% of it is still fixed. So therefore, even if interest rates theoretically came down over the next year or so, we will be least impacted by that.
Okay. On the asset quality front, I'll come to the liabilities question because that's a more interesting question to me. But I just want to take out the asset quality side of the story. Quarter on quarter, 12 basis point improvement, about 1.53%. It's probably the best numbers that you've had since you took over. I wanted to get a sense from you in terms of underwriting. I saw in your investor presentation you had given in great detail how you've changed the underwriting. But if you can just tell us a little bit for our viewers.
See, frankly, I'm not surprised at all it is 1.53. Okay, because we are working towards that. Nothing happens by fluke. So, in retail, anyway, customers normally have a tendency less to default, because they have underlying asset or cash flow. But how much substance of what we're building for, if you'd like to understand this, is that when we give a loan, we understand the cash flow of the customer. Meaning, we like to, suppose you saw a bank statement, and we already saw you're putting 1 lakh in the bank account. Then we make an EMI of 50,000 rupees only. So 50 will easily clear if your amount in the bank is 1 lakh. So this is the kind of thinking we have. So basically, we lend to cash flow, and this is the reason why our asset quality is so good. And except credit card business, where we don't do cash flow assessment, in all the other businesses, we do cash flow assessment. This is the heart of it, actually.
Okay. On the credit card front, the industry seems to be seeing a slight bump in the delinquency figures. What's your experience been like in this business?
Our really gross NPA is only 1.7% in that, and it is 0.4 or something. It's quite good for us. There's really no issue there.
Okay, but in terms of overall unsecured business, is this still as good a time as it was, say, a couple of years ago, to grow fast on that front?
No, in our case, we've been tracking this. I have been personally doing this for 30 years now. In Capital First onwards, we've been doing it for 13 years now. Both really, whether secured or unsecured, we trust only cash. So that's very important. So, one fundamental thing, let me say you gave a loan. There is money in the bank, that's why you gave the loan for repayment on a monthly basis. then we also have a debit instruction to that bank account to pick the money from that account. Customer is not paying you. We are pulling money from the bank. So this combination of having cash in the seeing the cash in the bank plus the right to pull it from there, it's as good as security.
Okay. On the liabilities front, I'll come to that question now. You've seen a customer deposit base rise by about 44%. I don't think anybody else is growing at that pace on the deposit front. CASA did dip, but there is a little bit of internal cannibalization that happens. CASA moves to FD in a high interest rate scenario. But how is this large deposit growth being achieved at IDFC First?
See, the main thing we are focusing on is that we don't want larger deposits in the bank from anybody. In fact, we are one of the few banks who, after I think 50 crore or something like that, we quickly dropped interest rates because we don't want bulk deposits in the bank. It's not sticky and so on. So our approach is that focus a lot on customer service, and really customers should refer customers, and that is a massive momentum. By the way, we're paying 4% up to 10 lakhs in savings accounts. 4 is like better than the big banks, but still not out of the park. So it's a brand, it's service. These are the kind of things that are giving us this kind of 44 is pretty good, I agree. But we got to sustain this over the rest of the year.
Okay. A quick question on the one of the other announcements that came with the results, which was that you're going to raise about 3,000 crore through equity fundraising. Your capital adequacy is a strong 17% at this point in time. What is this capital going to be used for coming in the coming few years?
So this capital, we may not raise it immediately. We've taken, because we have an AGM coming up next month. So we thought it's a very good opportunity for us to actually put out a resolution, take the shareholder approval today, so that it stays enabling for 1 year. So that we don't have to go to the shareholder at that period of time, when we want to raise capital. So think of like enabling, take the opportunity of the AGM. And the second thing is that probably by end of this year, we'll certainly raise this. So we still have maybe 7 or 8, 9 months to go.
Okay, fair enough. Is there anything inorganic in your mind at this point in time in terms of growth? Are you looking at any opportunities available to IDFC First at this stage?
See, our main thing in life is that the short answer is that we are a commercial entity and we are a growing entity. We'll always look. Well, we can be on the lookout. Nothing as we speak right now, but our eyes are open. But our main thing is that anything we take or look should always be making strong operating profits, because that is one trajectory we're yet to we have to grow in the bank, and therefore that would be one criteria in my mind. But nothing on the moment.
Okay, fair enough. Coming to the merger with the parent now, last we spoke, that had just been announced, the IDFC merger with IDFC First Bank. How far along or how far away are we from the completion of this whole?
We are right now going through the process, as you very well know. We go through the regulatory permission, NCLT, all that. The process are on. In our mind, there's no uncertainty. Our informal feedback, and in fact, even formal feedback from many customers, many people, shareholders, is that they are very happy, and we feel it will go through.
All right. Last question I wanted to tackle is a more industry and sort of macro idea. Now, as a lender, when you're looking at the current market where the league tables consistently shifting, there's some consolidation happening in one side of the private banking market. So the gap between the number 2 and number 3 has widened significantly. In an environment like this, where everybody is competitive, hungry, I'm just curious to understand if the prudence factor takes a beating at such a time or not.
First of all, I feel that, if you don't mind, a little different than what you just mentioned. We feel that this market is really very big, and there is no stampede out here. It's very big, and in fact, oftentimes we have to tell our people to slow down because we have enough. All their guidance is 22-24. Our loan book is, naturally it's coming more than that. We are actually having to tell our staff, no, we don't want to disburse so much money, just disburse this much. So there's no pressure to grow. First of all, it's coming naturally. Especially in the lines of business we are in, like loan against property, home loan, car loan, business loans, micro entrepreneurs are growing. So I personally am feeling more comfortable. The second thing is that we should be, and even via your channel right now, I tell all our employees not to run ahead of themselves. This is for us for the taking. No hurry here. And certainly, even for the industry, I feel that the ecosystem, bureaus and cash flow assessment, that ecosystem is much better today than I have ever seen in my life.
All right, Mr. Vaidyanathan, thank you so much for joining us on this conversation. Pleasure talking to you, sir.
Thank you very much.